accounts payable function is supported by three very distinct pillars: the three-way match, strong internal controls, and best practices. Think of it almost like a three-legged stool. If one of them is weakened, the entire structure starts to wobble and in extreme cases can come tumbling down. To be crystal clear, by structure we mean the entire organization. Let me explain. I've been immersed in the accounts payable space for over 25 years, interviewing experts and practitioners alike, writing about the function, talking about it, etc. Based on these insights, I strongly believe that without these three pillars, your entire accounts payable process is at risk. Let me explain. I want to start by exploring each one and why they matter more than you might realize. Let's begin with the first pillar. It's one that you might be familiar with if you work in accounts payable or manage accounts payable, yet it is often overlooked in daily routine. I'm talking about the three-way match. Did you know that one tiny slip in this process could mean thousands, if not millions of dollars in overpayments and worse? The three-way match checks that the purchase order, the receiving document, and the supplier's invoice all match perfectly. Think of it as a safety net, ensuring everything is accurate before the payment is approved and made. If they don't match, or as I like to say, they're discrepant, the differences are reconciled with the supplier and or the purchasing team before the payment is made. Think skipping a tiny step can't hurt? Let's look at how a mismatch can come back to haunt you. Why do I make such a big deal about this issue? Because it's critically important. A mismatch, even a minor one, can lead to an overpayment, paying for services the supplier was supposed to pay for, like freight or insurance, etc., or worse, fraud. Without the three-way match, you may also end up paying for goods you never received or were invoiced twice for. The takeaway: how certain are you that every invoice processes matches your records perfectly? Don't treat this as a formality. Make sure your team rigorously follows the matching process for every invoice, no matter how large or small. Think of it as a quality check that ensures that you're only paying for what you actually ordered and received. The second pillar is your strong internal controls. It's the accounts payable's shield against fraud, duplicate payments, and basic mistakes. In the accounts payable world, fraud isn't just a possibility, it is a real threat, with costly repercussions for organizations of any size. What would you do if one overlooked step cost your organization over $2 million? Here's a real-life example of how quickly things can go wrong. In this case, the accounts payable associate was trying to get a batch of invoices entered before the month-end close, so she thought she could skip verifying one of those change of bank account emails that came through late in the day. Small error on her part, but ended up costing that West Coast company over $2 million. Internal controls cover many practices, from appropriate separation of duties to use of coding standards and much more. Are your accounts payable processes truly secure, or are there hidden risks lurking about? With fraud protection and strong internal controls, we're talking about creating checks and balances so no single person has control over the entire accounts payable process. Imagine having a process so solid that fraudsters have no way in. That's what strong internal controls can do for you. Whether it's vendor verification, multiple approval for large payments, or software that flags potential duplicate invoices, these controls are your frontline line of defense. The takeaway? Remember, protecting your organization from fraud isn't just about reducing risk. It's also about preserving trust in the integrity of your financial processes. Remember, the people who know where the weaknesses are in your processes are your employees, both current and former. And without being able to rely on your processes, a few may decide to take advantage of these flaws. If this session is making you think, I'd love it if you'd hit that like button. It signals that you value the content and helps us grow. Plus, your reward for hitting that like button is the like button does a cute little dance. So thank you for helping us. Now let's talk about the third pillar, the best practices in accounts payable. This pillar is all about achieving efficiency while containing costs and of course managing risk. What if I told you that improving your accounts payable process doesn't always mean cutting costs up front, but protecting against huge losses? The goal here is to build an accounts payable process that's lean, accurate, and efficient without sacrificing controls. It's not as easy as I'm making it sound. Efficiency isn't just about speed, although that's definitely a part of it. It's also about not making mistakes and staying current on advances in technology that could make your accounts payable operations more effective. Likewise, it means staying current on the newest frauds and the newest fraud protection protocols, and then adjusting your processes to include the changes needed to guard your organization against these new frauds. And the old ones too, we can't forget them. Sadly, these new frauds are being developed at a rather rapid speed. It should be noted that these new processes might not make your organization more efficient if you just look at the processing costs and times. But there's a bigger issue here. On the face of it, you might look less efficient if you overlook the little issue of huge fraud losses. If you don't make the needed changes in your very timely manner, you could be hit with one of them. It's also about strategic planning that results in cost savings over time. You can't continue doing things the way you did last month and last year if you want to stay as a best practice organization. The business world is evolving, and it's evolving fast. And if your processes aren't keeping pace, they could be putting you at risk. Your processes need to evolve if you wish to remain a best practice organization. Your accounts payable team is your best asset in spotting efficiencies. Here's why their input could be a game changer. They're much closer to it than you are, and they will see things that you don't see and management doesn't see. The takeaway here, ask yourself and your team, are you operating as efficiently as possible? Are there manual processes that could be automated or workflows that could be refined? You may be wondering why you need to ask the team. I've already kind of alluded to the answer. It's simple. They are closer to the day-to-day manual operations and probably have some really good suggestions. Once you've gotten all their input, it's time to roll up your sleeves and get started. But here's the thing about best practices. There are so many of them. In fact, I wrote a book that's called 127 Best Practices for Accounts Payable. Yes, that's right, 127. It's available on Amazon and other online booksellers for about $40. Now, to be honest, and I'm going to be honest, no organization uses every single one of them, but you should strive to use as many as possible. We recently put together a short talk on 17 of the more important ones, which you can watch right now using the link that has appeared on your YouTube screen and is in the description. Good luck.